Hi, I'm Grant Stephen.
And I'm Kris Bernier.
And we're the Two Investment Guys. This week, Kris and I want to continue our discussion around a couple of the major factors influencing capital markets right now. Firstly, we'll just have a quick look at the indice returns from around the globe. So far this year, Toronto's down about 10%. The Dow Jones in the United States is up about 4%. S&P 500 is flat so far on the year. When we turn to Europe, we've got London down about 5%. Germany is down about 12%, and France is down 16%. And then when we turn to Asia, we've got Tokyo down 16%, and Hong Kong's actually down 17%, the global laggard of the major indices. All the attention seems to be on Europe, but certainly the major Asian markets are having their challenges as well, Kris. Some developments in the Eurozone. It's an ongoing story. Why don't we touch on that first, Kris?
Sure. Well, we've most recently seen Standard & Poor's put 15 European nations, including France and Germany, the big two, under credit watch with a negative outlook. So that's kind of sent a bit of a shot across the bow, if you will, to get the leaders together and start to hammer out a plan. They're talking a lot about greater fiscal union, and we'll see what comes out of the summit later this week. As an example of what's happening in the southern part of Europe, in Italy, we've seen the new leader there table a number of austerity measures, tax increases, and spending cuts that's hopefully going to put them on the right path.
Yeah, it's interesting, Kris, that there seem to be at least talk in the talk about making some policy initiatives roll into place that are going to have some impact on their fiscal imbalances over there. Wanted to turn to the U.S. because we like to keep tabs on that market as well. Now, some interesting data points that we're seeing come out of the U.S. Certainly don't imply to us that there's a strong recovery in place. But I will say this, the indicators are all turning more positive, albeit slightly. You can look at recent jobs reports that are improving. You can look at retail sales and retail confidence that is improving. And believe it or not, even in the housing industry, the new housing starts has stopped contracting. Now these are only marginal increases, but the point is, when you add these up in aggregate, it's probably leading to a soft landing in the economy. They're likely going to be able to avoid a recession, and that was the big discussion for a while, Kris. Now, notwithstanding all of that, they have major political problems down there, and it's interesting to me that they can't make any headway on any policy. There's an election coming up and all that kind of stuff, and yet the European policymakers seem to be making some progress. I find that quite interesting.
That's right. One other thing that we want to talk about quickly is the Bank of Canada recently kept interest rates on hold. In the verbiage, they talked about third quarter gross domestic product being actually a little better than what they expected, but are still being fairly cautious about the fourth quarter and heading into 2012. Now, in terms of what investors should be doing now, one of the things that we've been talking to our clients about is tax loss selling. So critically looking at portfolios, trying to flatten out any capital gains that maybe are crystallized earlier in the year in taxable accounts and avoid some tax bill in the springtime. We want to be cautious about fund purchases in taxable accounts at this time of year. You don't want to capture a big distribution at year end and have to pay tax on that. And again, as before, we'll make sure that you're sticking to our yield story that we've been talking about for some time. Dividend paying equities, high quality corporate, some high yield bonds, and get paid to wait for growth. I want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at TwoInvestmentGuys.com.
Join us next time. We're going to continue our discussion on market development. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.